Those tariffs are ostensibly aimed at Beijing, but American businesses are warning that they could feel the pain too. President Trump just tweeted this morning, tariffs have put the U.S. in a very strong bargaining position with billions of dollars and jobs flowing into our country. And yet cost increases have thus far been almost unnoticeable. If countries will not make fair deals with the U.S., they will be tariffed. But U.S. companies say their costs are rising, and eventually they'll have to pass that on to consumers. In a letter to the government, Sears said, quote, a remedy for China's unfair acts, which harms U.S. retailers and an iconic U.S. brand, is not much of a remedy at all. For Fitbit, the tariffs could drive up retail prices, dampen innovation, and push U.S. consumers to purchase Chinese alternatives. The company says that shift could even have a national security implication because of all the personal data that it collects. Meanwhile, manufacturer Cummins, which we should note is headquartered in Vice President Mike Pence's home state, they said it can't get the parts that they need from suppliers outside of China. And even if they could, a global production shift of that magnitude would take 18 to 24 months to implement. Let's also not forget that China has promised to fight back with tariffs of its own on roughly $60 billion of American imports. The bulk of that is expected to hit intermediate goods. About a quarter would likely be on capital equipment. Both of those would weigh heavily on the manufacturing sector that President Trump is trying to defend. Now, the administration says the short-term pain will be worth the long-term gain. It wants to end IP theft and also state subsidies. But guys, businesses are clearly not convinced that the strategy is going to work.